Well, good morning. I'm Scott Shelby, and this is Market Day Reports. And the one thing I love about this job is it keeps changing every day. And we've had some tectonic shifts in the markets, which will ultimately affect you as producers and consumers. Stay tuned for the next two and a half hours, because I'm going to go through and touch base with you all on a few of those things, which are very, very interesting and have only come about the last couple of days. So why don't we get to the corn market real quick while I'm talking about the markets. These overnight corn, we've got on the defensive, lower by 6 in the Deese. Deese is going to be the new crop, 525 even. Just can't find its feet. They're looking for some overall strength, but I'm telling you, we're going to talk about this for the rest of the day, but we are moving from an inflation story to maybe an economic weaker story. So let's move over to soybeans, Novi beans. $13.1325. Boy, oh boy, down 14 cents there. They can't hold a bid either. And then we'll just touch briefly on the wheat market here, or over in Chicago. I keep thinking I'm still there. Let's look at Sep wheat at 621.5. That's down 3/4. We've got Brian Hoops on the line with us. Brian's from Midwest Market Solutions. Brian, you saw the backup in prices there. What are you thinking? What jumps out at you, and what are you going to be talking to your customers about mostly today?
So, we're talking with the rain in the forecast once again, how hard it's going to be to sustain rallies in this corn and soybean markets. We saw a bounce yesterday in soybeans, but really couldn't sustain that or push higher and follow through with it. Corn found some support yesterday around the 520 mark, and that's going to be a key on the charts once again. I think that 519, 521 area going to be real pivotal for the corn market, because if you start closing below that, you open the door for $5, and that's a major support area as well. And with all this rain that's in the forecast, there's certainly areas that are going to be missed out. Parts of Iowa and the Dakotas, Montana, and northern Minnesota, all these areas extremely dry and going to miss out on things. But the near term, you're looking at the ice states of Illinois and Indiana and Iowa going to receive some real beneficial rains and going to keep lids on this rally in the markets. I don't think we fall out of bed completely, but you've got the big funds swinging in this market one way or the other. They've been liquidating long positions in both corn and soybeans. I think that tends to continue as margin values increase, the U.S. dollar index rallies. All that is working against the grain markets as we go forward, with the one bright spot being Minneapolis wheat. Now I think that market's probably peaked as well. We've probably set our highs up in that 845 to 855 range as the growing season effectively coming to an end. And I'm hearing millers in the northern spring wheat areas starting to buy winter wheat and blend it and mix it into the spring wheat. So they're kind of doing that because of price and because of lack of quality of the spring wheat crop.
And I can't help but mention that we also did have an overnight sale of 122,000 metric tons soybean meal to Mexico. That, I think, is the first one in a bit. So that'll be interesting to talk about, too, today. And I think also, I'm going to leave it on this one, Brian. We'll come back after the break. But I also kind of feel like it's how bad the bad spots are versus how good the good spots are, right? And it just seems every year we might pay a little bit too much attention to the bad, and we end up doing pretty well with the crop. So we'll see how close we get to trend line yield. After this, we'll take a quick break and come back and talk with Brian Hoops. Welcome back to Market Day Reports. I'm Scott Shelby. We were just on with Brian Hoops talking about the grain market. I'm going to go through last night's closes and live cattle, feeder cattle, and lean hogs, just to give you all a starting point for where we're going to begin today. But obviously you can see by those numbers that we were on the defensive in live cattle. We go to feeders as well. They too were on the downside of things. And I think that this is something that I'm going to touch base about all day today. And again, it's this tectonic shift of going from this inflationary environment to maybe the economy not doing as well as we thought environment. So lean hogs, again, also on the defensive there until you get out to February, where it tried to eke out a small gain. What are you expecting today, Brian, when we open these things up? Are you still negative? Are you negative or following these markets, or what are your thoughts?
Well, we didn't have any export sales this morning. Those are coming out tomorrow, of course. And we try and get some direction from our export business. So we won't have that going for us today. We're looking at cash cattle trade coming in the Southern Plains anyway, steady to $2 lower. It seems to be much tighter on a dress basis. Nebraska clients tell me, they've traded 198 up to 202 this week, kind of a steady to $2 better market than a week ago. I think as we go forward in the next several weeks, we're still watching the cash and the markets for direction. August went lower yesterday, following the lead of that cash market. And if we can stabilize the cash, stabilize the cutout values, I think the future stabilizes as well. And we still have a bullish story to tell into the late third and fourth quarters of this year for the cattle market as we get through some of these bigger supplies.
Well, Brian, you get the Cow Guy Blue Ribbon of the day today because you kicked off the fact that we're talking about the dollar, which we don't hear that often in a lot of these segments. And I also think the 10-year yield is very important. And, if you go look at, say, why do I say that's important? If we go into a recession or if our economy starts to falter, I mean, just look how bad things are down in Brazil. It's going to affect your marketing plan or your procurement plan if you're a consumer. So it's interesting to see that we had the Fed come out and say some things yesterday about how good they thought the economy was. But then the market reacted like they didn't believe the Fed was telling the truth. So we've got a 10-year yield. The interest rates are going down. The dollar is getting stronger, which shouldn't be the case. But we're having an argument right now in the markets about whether or not we're doing well and it's inflationary or it's just temporary and we could fall flat on our face. And I think everybody's got to kind of take a breather, stay in their lane, and not get too far over their skis here because there's a lot to learn about that shutdown coming up. What do you think about that?
Yeah, I tend to agree with you. There's a lot of foreign countries that are starting to rebound as well as their economies are opening up. And so I think their currencies are going to strengthen. And, if we see any weakness in anything here in the United States, as far as our economics go, I think that dollar will tend to weaken against these other currencies. And that would be beneficial for our crops, for our grain exports, beef exports, pork exports. All that would be a benefit. So, the dollar's been rallying since late March, early April, and we've seen the funds liquidate some long positions about the same time as strengthening dollar usually tends to weigh on our export business. So I think there's concerns about the economy. We've had a lot of stimulus money that's been pumped into the economy. If that starts to run out, I think we will see that dollar start to weaken once again.
Well, thank you very much, Brian. You've earned yourself a ticket back, a first-class ticket back to the show. That was great stuff. Right. That's Brian Hoops with Midwest Market Solutions. We'll be back after this.